Hello, I'm Joao Simoes, host of the GigaBrain Podcast. Here, we share real stories, strategies, and innovations from builders, operators, and thought leaders shaping the future of finance. Subscribe right now and follow us to stay ahead in crypto straight from the source. Thank you. Hello and welcome back to another episode of GigaBrain Podcast. Today we are here with Ray, marketing manager at CipherBC. Welcome, Ray. Super excited to have you here. Since Hong Kong we met and we decided that we needed to do this. We need to bring you on the podcast. And to kickstart things, please let us know a little bit about yourself, your background. Why are you in crypto? Why you find crypto exciting? And then why CipherBC right now?
Hi guys, I'm Ray. I first entered crypto by coincidence. I was just searching for jobs, honestly. And when the first project I've worked on is NFT that was very popular at that time. So we were trying to build up IPs in different industries, and then we are launching NFT collections, and then later on, I joined our marketing agency, and then I started to get more access to different kinds of ecosystems and then channels, including like Bitcoin Ordinals on podcast ecosystem. And then also when working as a marketing manager, I enjoyed it a lot. Also, it's kind of a burden because, in blockchain, everything changes so fast. There's a lot to adapt. And then right now, currently I've been working in a company called CipherBC. So a short version to introduce of what we do, we build the asset operating system is an MPC-based wallet powering secure, scalable, intelligent asset operations across crypto and institutional finance. Okay, let me get to it. I want to set a hug. So if you're in crypto in 2026, right, you already know the word RWA, right? For anyone catching up, RWA means real world asset tokenization. It is the process of converting traditional financial assets. It should be RWA stands for RWA, real world asset, and real-world asset tokenization is the process of converting traditional financial assets such as bonds, real estate, commodities goes into digital tokens on the blockchain, right?
Absolutely. And so one question that I have for you to kickstart going deeper into Cypher is exactly what is the gap that you guys are filling in that was needed, and why Cypher right now is so important?
Think of what we have been talking about, just like the AI agent boom here, right? Lots of people start downloading skills on OpenCloud and send their most sensitive data, private conversations, business strategies, confidential documents into models without a second thought. But what happens to the data? Like, who owns it, and how is it protected? And it's the same thought about the digital assets. So lots of people focusing on stepping into blockchain and what the technology could do, but they forgot about what it could be exposed. So, I'm getting a little bit far away. So back to what we are talking about. So it is heading down the same route. The capital is there, the narrative is there, especially big banks or payment providers dealing with high frequency transactions. They are being very skeptical. How do you keep all this safe on chain? That's what we are trying to do, providing MPC wallet suite, and also providing a unified operating system that makes everything into a whole complete secure ecosystem.
Amazing. And so institutions have been slow into moving into crypto, even though we are seeing more and more adoption. And how much of that hesitation is genuinely a custody problem or versus a regulatory one, or is a cultural one? Like, how do you see these institutions moving into crypto at Cypher?
let me start with a little bit about what MPC technology really do. So when you think of MPC, is actually called a multi-party computation. You must be very familiar with Metatask, or you may hear about multi-signature wallet. They all share the same fundamental vulnerability somewhere in the system. Is there is always a complete private key exists. Like multi-mask, the decentralized single private key wallet, or multi say yes, it requires multiple approvals, but each signer still holds a complete intact private key of their own. So any one of these keys, if lost or compromised, becomes a direct attack surface. So stack as many protection layers as you want. Like if a complete private key exists, it can be found, and the vulnerability is built into the model by design. And also, as for compliance, because blockchain changes so fast, and also each area, each country has their own rules how they perceive blockchain, and also RWA, the regulation policy. So one of the concerns the large institutions they have is whether if their assets are being on chain, the compliance is completely uh, compatible to all the areas.
Right. So you think that with all these new technology, this will make institutions way more happy and eager to actually work in crypto and move into crypto, right?
Yes.
Perfect. And when you look at, for example, a traditional financial institution, what are the top three things keeping their legal and risk teams up at night at this moment? So you speak about regulation, you speak about security. Do you think that these are the main ones? There are other ones, like how do you guys are feeling when you talk about all these institutions and you talk about with your clients, etc.?
Okay. So as I mentioned before about MPC wallets, we actually it relates to me how we actually are designing our flagship products. So when we are saying we actually providing an MPC wallet, so let me start introduce a little bit of each different kind we provide. So the CipherBC asset operating system, it runs on 3-layer architecture. So each layer is actually purposely built for different client groups and transaction types. So yet you can operate under one unifying platform. So we are starting early from building like wallet servers. Hard wallet is an MPI based, built for high frequency and fully autonomous scenarios. And then we start building the another layer is called CipherBC Flexify, the warm wallet. You can think of it as operational command centers. So, at scale, a company handle like millions of transactions daily across different teams, approval levels. They need something more like a CRM, a system that intelligently automates and streamline transaction workflows. And for a third layer, we have this Cipher Safe Code wallet. Think of it as an ultimate top tier secure vault. So for large value assets, and highly sensitive transactions, the security bar is absolute. And Cipher Safe is, I would say, the world's first MPC-based hardware code wallet. Okay, introduce our products too much to answer your question.
No, but that's perfect, because one of my question was exactly that, like for you to explain all the products and how you guys are working. So this is perfect.
So yes, when we are designing our product, we think of what our clients need for different purpose and in different types of transactions, and what especially if this more to their personal use or is like they want to manage for their entire company, and also if they want to build for merchants and then interact with their clients. That's what we have been thinking, and that's why we came up with three specific different wallet types, but yet within one system.
Perfect, perfect. So I have here one more, a bit more technical question, which is your RAFP framework addresses internal control specifically. So how does that map the kind of governance and audit trail requirements that institutions actually face? So specifically about the RAFP framework, if you can explain that.
RAFP actually stands for rule-based approval protocol. It's the intelligence layer that make everything works smoothly and basically resolve one question: who under what conditions can do what. Okay, let me give you a scenario. Say on a Tuesday afternoon, and then the CFO Sarah is leaving a board meeting and then heading to the airport. It's a very tight connection. You're in the international airport, and suddenly you receive a reminder you had this like a 120,000 USD dollar deals you have to deal unsigned. Well, because the amount is very big, right? So in our RFP engine protocol, it triggers the rule that, okay, it's above the bar 5,000. Now it automatically direct to Michael, like the financial manager. So he will get a reminder on the our wallet and review all the details and approve it. And then it rolls to the one last person, Lisa, the risk compliance officer. She screens counterparty address and then make sure it's the right address and then the right procedure, and then finally route back to Lisa, Sarah, the CFO. She can just review it within the app on the mobile and then sign it with one tap, and boom, that's done. There's no single fault call made, zero fraction and zero compromise, and then she'll be boarding on the flight already, and then a deal is made. And that's how it works as an RFP. And let me sum up a little bit. So as a RFP rule-based flow protocol, you can customize grant approvers, signers, and risk controllers. And also, transaction limits are completely flexible. You can auto-approve routine low-value transactions and require full multi-party sign-off. And most importantly, last but not least, RFP integrates with leading security and audit firms like Certic and Slowmist. Every outgoing address is automatically screened in real time. So there will be a flag destination knowing hackers' address, suspicious pattern gets automatically anticipated before it moves. That's the RFP by design.
Amazing, amazing. Thank you for this explanation. This is really, really nice. So I have you talked about security, and I'm curious also. So single points of failure are obviously a threat, but we talk about also internal threats being equally dangerous nowadays. So can you walk us through of how are you dealing with all these hacks, all these solutions, and how you stay protected in a world where more and more failures exist, especially even human failures. So how are you dealing with all these things?
Sure. So when we start designing RFP, the whole particle design was facing towards inner misconduct, essentially. RFP is just foundation. we build it based on how to go against inner misconduct. So in our system, every team member, like from junior associate to founder, they all have an opportunity to have a defined roles, a defined authority, and a meaningful part to play in how assets move. But we also operate on the principle of least privilege. So basically, you have exactly assets your role requires and nothing beyond it. And for example, a risk controller can approve workflows and assign team permissions, but cannot sign transactions on chain. If you are the signer, can authorize the movement on chain, but you then cannot restructure who has access. So each person, each role accountable to the system and also to the other. That's how we're built the architecture of trust within our wallet
And when you sign in transactions, like you need multiple signers or it's a one-time signer? How does it work?
You have the option to design your own flow. Actually, you can choose to be only one or a few of, let's say, like 3 out of 5 to be the signer groups. Like 23 of 5 has already signed, and then the transactions could be on chain. So it's pretty flexible depending on what kind of transactions and how what's the amount. It could be very flexible.
I understand. So, and another, now passing to a more generalistic question here. So, when we met in Hong Kong, you said that CipherBC is very comparable to Fireblocks or other companies similar. And when you are, of course, selling your products, doing podcasts like this and explaining, like, how do you differentiate from Fireblocks and why your product is better? Why you what are you doing differently and best than, for example, Fireblocks right now?
When we start building wallet, we think of payments feel like the right place to start. So we care a lot about where the money moves. But the longer we study crypto, the more alerting question became impossible to ignore. So we really focus on who covers more payment methods, who charges lower fees, who delivers higher success rates, who onboards faster, who settles more reliably, who creates less compliance friction. Once you enter the comparison framework, what you're selling is no longer a module. It's basically supply parameters, and parameters can be optimized. So that's why we start building more. We basically, in the very beginning, we only have wallet as service and API based hot wallet, and then we have this Flexify warm wallet. So we're starting to more like building the architecture. Like you mentioned, our competitors, they have similar wallet architecture, but on their mobile version, it's probably nothing more than a mobile signer. It's a signing machine. But CipherBC Flexify warm wallet is actually a full-featured treasury console in your pocket. We basically integrate almost all features on the desktop version, like into our mobile version. And also, when building the infrastructure layer, while building, we thought that was a complete picture. We then met a different kind of client entirely, and then they were not asking about like the workflow efficiency or like mobile convenience. They were asking a more fundamental question. At a certain scale of wealth, the first model changes completely. It's no longer about whether your treasury runs smoothly. It's about whether your access can survive or tackling an attack. As
Yeah.
sophisticated breach for these clients,
Yeah. Yeah.
finding
Yeah. Yeah.
network
Yeah.
connection is a risk.
Yeah.
So Cypher is safe. And then later we built our cold wallet. Is essentially the first military grade offline signing terminal. It's a dedicated hardware wallet based on MPC architecture. It could be
Okay. And anyone can buy this wallet? Is it on your website? I can go there and buy it right now, the
it's on
hardware one?
our website. We're in our last beta version because we again focus on security a lot. So we send out audits to third party, and then we want to make sure and is audited, and then after like tons of testing it goes smoothly, and then we will launch in a short future.
Amazing, amazing. No, thank you for all these insights. Super, super nice. So we always like to ask our guests a feel about the market right now. So leaving a little bit the cipher, all technical questions, and going for more macro questions. So how do you feel about this market? Like, do you feel that it's a bull market? Feel it's a bear market? Like, what we have been seeing is that the cycles doesn't look the same as the previous years. It's more like a political market now. It's all about Twitter. It's about who pushes the right Twitter trend, and then specific tokens go up or go down. So how is your market perspective right now, and how do you feel in the next, let's say, Q3, Q4 this year?
Everyone who's determined to stay in crypto will always have a higher ability to take the risk. You know, I would say right now the market is a little bit down. I'm not gonna lie. And then from early stage, all I can witness is the market is getting more complex, and I I do believe geopolitical is part of a reason because a lot of people are thinking about using cryptocurrency and using blockchain as a leverage. It's more like um, buying cryptocurrency as a reserve and use it as a I would say staying in crypto market. I still hold highly confident about it.
So do you think that we are in the bear market, but you are still bullish for the next few months?
Yes.
Okay. Perfect, perfect, perfect. So I have here also a couple questions about regulation for you about the market regulation. So for example, in Europe right now, you have Mika and you have like evolving also frameworks in Asia, in the US. And these are, of course, started to change a lot of the mechanics and a lot of how institutions play a role in crypto. And how does this affect positively or negatively? How do you see the institutions moving money and how that affects Cypher as a business? Do you see it's something positive? Is something neutral, negative? How do you see it?
I can share my experience and opinions probably across the regulation policy and trends via different markets. From other conversations that I have, I do believe in the MENA region, Dubai is still the leading market and the leading area that um, reviews and then the leasing information and the newest policy about compliance. And in the Europe, it's more about focusing on uh, bridging the financial institution with the how to regulate and then make it compliant, but slowly, I would say it's a little bit slow. In the North America area, it will be also focusing on how to really be compliant and also make the real world asset being tokenized. There are several like leading firms. They're actually seeking opportunities and then thinking about, okay, now we are not just an exchange like a crypto exchange platform. It's more about how we should collaborate with other banks or even forming into digital banks that provide more options and opportunities to let the money flows. Well, as for in Asia, in the area, I would say is always like the fastest and then uh, area and then market the cryptocurrency that you know uh, go through like changes. And I'm sure like the compliance framework will also be uh, more complete in the near future.
So you say that for you guys, it's all about starting to connect the dots between institutions, banks, and like bigger and bigger clients, right? Yeah, that makes total sense. So we are arriving to the end of our episode here today. I want to ask you, of course, please let our audience know about any alpha, anything that you guys are building for the next months, the next quarters, any type of news that you want to share. Please feel free. You have 2-3 minutes to share anything that you want extra.
Sure. So I think I wanted to share our probably the philosophy behind how we build up our next version. So we took really seriously about governance. So when we are designing the governance layer, the question wasn't what features should we build. It was if you're responsible for your organization financial health, what do you actually need? It's all about funds moving efficiently to obtain the liquidity and something easy to overlook. It's a system that's fair, transparent, and accountable to every person operating with it. So, um, how does how do you govern your team like fairly? That framework we are inspired by actually like the if you look back human civilization, you can think of like the ancient Athens. They believing citizens are capable of rational participation and everyone should have a meaningful role. So in our system, we RFP today is just a foundation, and blockchain offers something traditional corporate finance doesn't. That's transparency and decentralization. That will be the same principle behind DAOs, the same value-driven on-chain governance. So our next evolution, it would be in, integrate a voting mechanism built directly into our MPC wallet, MPC asset operating system, and where significant asset decisions aren't just routing to approvers, but put to a structured vote among designated stakeholders. And think of it like a democratic governance, and but also cryptographically enforced.
Amazing. I love that. I love that. Thank you so much, Ray, for this. Please also tell the audience where we can find you, your website, Twitter, anything.
Yeah, sure. If you're interested in us, you can follow our social platform handle CipherBC. It's the same on LinkedIn. And then if you're interested, you can also request a demo on our official website.
Amazing. Thank you so much, Ray. And guys, thank you so much for tuning in to another fantastic episode. And we will see you in the next one. Cheers.
Thank you.
Thanks.
GigaBrain is brought to you by Swell Labs. To find out more about Swell, go to swellnetwork.io and make sure to search for GigaBrain in Apple Podcasts, Spotify, or wherever you listen to podcasts. Hit the follow button so you don't miss any future episodes. Thanks for listening.